Beef Market Update with Ann Wasco on RealAgriculture.com is brought to you by Haney Farms. Right now we are talking to Ann Wasco of the Gateway Livestock Exchange. It's time for the Beef Market Update. Annie, how's it going?
I'm good, Sean. How are you doing today?
I'm doing really well. So let's jump back a week. Last Friday we had the cattle on feed report, and it was bearish.
Yeah, there was a bearish surprise to the placements. And I think what kind of caught a lot of the trade off guard is, we've had all of 2017, well, even back to the fall of 16. We've had every month bigger placements. And so the expectation was, okay, we've placed all these more cattle. We were expecting kind of maybe 3% less. It came off 3% more. But I think it's just because it's been so many months. We've already placed more than 1 million head more than this time frame, in 2016. So I think it was kind of, oh no, another big month of placements. And so the market dealt the first half of this week dealing with the negative news from that. But as we come into the end of the week, we've clawed a good chunk of that back.
Yeah, that's interesting. On Friday, a lot of analysts were saying they were just dreading this week. It was going to be just red all over the screen. And, Monday wasn't a good day for cattle. But if you look at the rest of the week, like you said, we really have chipped away and worked our way back.
Yeah. So it's the market having every week, it seems like, they're having to prove itself. So we'll see what this week, what today brings. We haven't traded cattle like last week. It looks like it's going to be late in the week before we get business done. But nevertheless, it'll be interesting to see how the dust finally settles on our cash market for this week.
Okay, so there's a lot of stuff that doesn't make a lot of sense here, and I know you're going to clarify for all of us, but so we have all this supply of cattle. We've got the future kind of chipping back. What's happening with demand? Because you would think that prices would be going lower here with so much supply.
Well, supplies have been bigger, certainly, and that is, so far in 2017, the U.S. is 4% more beef than last year. Here in Canada, we're 3% more in tonnage than last year. But when you look at wholesale pricing, so we better be, not too quick to just make some assumptions about demand, because wholesale pricing actually in both of our countries is higher than it was this time last year. So in the U.S., the choice cutout's about 2% higher than last year. In Canada, the AAA cutout's about 3% higher. So certainly, even though there's more beef around, from a domestic demand perspective, it's been better. And don't forget, both of our countries have had better exports in 2017. So it's not always a slam dunk, but at the same time, this time last year, October 2016, was when we were certainly struggling on the market, and that's when, of course, the Fed cattle crashed down below $1 US. So it's been in the back of our minds, and that feels like that's why the market's having to continually prove itself.
Well, one of the things that's helping Canadian feeders, we have a lot of different variables that impact that price that we get at the farm gate, and one of them is basis, and that has been a bit of an unusual story here as of late.
Well, it has. We look at we're heading into October. That'll be our biggest month for calf placements in Western Canada, and we're starting the month off, or we're going to start off October about $25 100 higher on calf prices than this time last year. That's, $130, $140 a head. So what gives? And I think one of the key factors is what you just mentioned, Sean, basis. And that's the relationship between our prices and the U.S. And September was the best basis month ever for Alberta, as far as where we traded vis-a-vis the U.S. We were, in Canadian dollars, $4 a hundred over the U.S. The historic average is 9 under. So when you have that $13 a hundred improvement to the basis, that's like $180 a head on a 14-weight steer. So certainly then you can follow that down the chain, and that's what's evolving into these higher feeder cattle and calf prices that we're looking at.
So why?
So there is the question. Is this an aberration? I mean, we've seen times in the past where you occasionally get positive bumps in the road where basis is higher than you were expecting. And it usually goes back to a supply factor. So I think the underlying case for this argument is that Canadian supplies continue to be tighter than the U.S. We haven't gone into herd expansion. We don't have a bigger calf crop than last year. So I think that's the underlying thing. But then there's got to be something over top of that as well. And I think that's the demand piece. So both of those things, I think, are supporting the why.
So what are some of the things that producers need to be looking out for here in the next week?
Well, like we've talked about basis, but again, when we talked 2 weeks ago, the storyline was exchange rate. Well, ever since we've talked about it, it's come back down to 80 cents. So, but it's still a factor. We can't ignore what goes on with our exchange rate. Is this basis change a permanent change, or is it a one-off? We're going to head into the next 30 days of this calf run in pretty good shape. As you visit amongst those at the rancher level, there's certainly lots of concern about moisture and feed and what lies ahead for next year. But as far as getting the 2017 calf crop off to town in better shape than we were a year ago from a price perspective, it certainly looks like that's going to be in the books.
Yeah, I know around my place, I know we're definitely putting those fall placements into dry pens. We have that part figured out. No.
Yeah, there you go. Nobody's talking about mud.
Okay, Annie, thanks a lot for joining us for the beef market update. We'll talk to you again soon.
Okay, thanks, Sean.